The Fed is expected to cut rates by 25 basis points shortly. Hello traders, this is Farwas Exotic Market Analyst for City Index. Today is the 29th of October. So risk appetite remains strong heading into the Fed meeting. A 25 basis point rate cut is expected, as you can see here. We will also have a rate decision from the Bank of Japan overnight, where no change is expected, and the ECB as well are expected to hold policy and change tomorrow. Ahead of these central bank meetings, we had the Bank of Canada earlier today, cutting rates by 25 basis points. And they delivered a hawkish leaning statement, which caused the Canadian dollar to rally to a monthly high. And that caused the dollar CAD to fall sharply. Now, risk sentiment remains quite positive, with the major US indices all hitting record highs today, thanks to the AI-driven rally, with Nvidia passing the $5 trillion market capitalization mark today for the first time ever. And that has pushed the S&P 500, Nasdaq 100, and the Dow Jones all to new record highs. Here you can see the S&P 500 daily chart in front of you. It's closing in on that 7,000 level. Can it get there this week, with the Trump and Xi summit to come as well on Thursday? That could potentially be the trigger behind a possible extension of this rally. However, if the meeting ends with no deal to at least extend the trade truce, then that could potentially hit equities hard, although I don't see that happening at the moment. But you never know with Trump, so take nothing for granted. Anyway, the key levels to watch on the S&P 500 are marked on this chart in front of you. 6,750 to 6,765 is a key support area to watch. Prior resistance, we've broken cleanly out of that area in the last couple of days, so any pullback to that area in the coming days could potentially provide a tradable bounce. Ahead of the Fed and Bank of Japan meetings, the dollar-yen has found some resistance from this bearish trendline that has been in place since July of 2024. It has found a possible double top formation there, although this is yet to be confirmed at 153-ish, where we also have that trend line, as I mentioned, converging. Key support, though, remains at 151, this green shaded area, where previously it had found resistance, and we finally broke through that area, and now we're above that zone still, where we have the 21-day exponential also converging. So for as long as the dollar-yen remains above that area, the path of least resistance will be to the upside. However, things could turn a little bit more volatile should the Bank of Japan turn out to be more hawkish or deliver a surprise rate hike. That could potentially cause a major slide in this currency pair. So watch out for that potential scenario. 150 is the next downside target below 151, and that is a key psychologically important level. Below that, then we have this bullish trend line and the 200-day moving average as well, coming in at around 148 to around 149 area, depending on how fast or otherwise the currency pair falls from there. Now, the ECB is expected to hold interest rates and change on Thursday, and that could potentially cause the euro dollar to break out if they turn out to be a little bit more on the hawkish side of things. At the moment, rates are testing 116.50 resistance area, where we have the trend resistance of this continuation pattern or bearish flag, depending on how you see it, converging around that area. A potential break above that could target 117.30, the high that was made in mid-October. Above that, 118, then 119 are the next key areas of potential resistance. But I think the euro dollar is still heading towards 120 in the coming weeks, I think, because of the fact that the Fed is cutting interest rates while the ECB is turning a little bit more neutral. So for that reason, I expect the euro dollar to continue pushing higher in the coming weeks. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.